This is a short trade setup for HD Home Depot. And we put in a sell signal right below 317.90 support price level. We had minor support trend line here off the March lows here of 2021. Each candle representing a day. This is the daily. And a brief bounce up to that 317.90 would provide an objective entry short. If we get it, 2.6. If we don't get it, my first target 299.30 for a 3.6% drop, and then 287 for a 7.8% drop. And really, we came out. Pending home sales came out today as just a disaster. 4 months in a row now of decline. And when the pending home sales start to decline in the data, then your builders are going to come to a halt. Home builders will come to a halt because there's nothing to issue when it comes to a brand new home that they're trying to build. And of course, Home Depot gets reflected off that. Construction comes to Home Depot. They sell their product down to the builders, and builders build those new pending home sales. So when they see new pending home sales come to a halt with 30-year fixed rates skyrocketing to 5% now, and a bond bloodbath going on in the bond markets, you got the 10-year already popping 2.5%, probably even more upside down up to 3%. 30-year, everything's inverting. It's just a all-out bloodbath in the bond market. And so it reflects the housing market. And with the housing market slowing down, then you can expect Home Depot and the builders are going to come to a halt. They've already been getting clobbered. And those building permits will probably, the building permit data will probably even come out even more horrible. And again, huge reflection of Home Depot. Anyways, back to the technicals. We got that volume map price indicator right here. Beautiful. So there's a lot of people that have purchased this stock around this key level. So that's why, to me, 317.90 is a pretty key level of support. Again, we already came back down with the flag pattern, bear flag, flagpole, and measured it to the T of that 299.30. Bounced back, had a counter trend rally here, and hit resistance again. We got the 50-day and 200-day moving average in a death cross pattern. And we got rejected pretty swiftly here. So we'll see. We'll try to come for that 299.30 and that 287. Ever more bearish is the monthly. And this is what you call a 3 outside down bearish continuation pattern. It's as good as it gets. This is off the 2008, 2009 great financial crisis lows here. And I suspect there would be more downside in hitting some of these longer term targets. And again, if we start cracking below here, we start hitting the brakes here and start coming down to 299.30 and 287, I'll start to issue more targets to see if we can hit them, and see how it plays out. Keep you updated.